Hello guys, welcome back to Lexyducation channel where we try to simplify your learning as much as possible. In today's video, I'm going to be showing you another beautiful strategy with which you could go into the forex market making some profits for yourself. Now, we're going to be working with indicators like the Williams percentage range. I'm going to show you that. We'll simply add that to our chart. Now, this is the Williams percentage indicator, and we're going to be working with a period of 14 style 3 pixels levels minus 80 minus 20 and minus 50. When we're done, we add it to our chart. Now, just in case you're new to this indicator, this is the Williams percentage range indicator. So we're going to be adding another indicator to the chart, which is the Bollinger Band. Now you're going to see how powerful these two combinations are. Adding the Bollinger Band, now we'll be working with a period of 20, deviation 2.0, apply to close, and just that. Then we'll click on it, and then this is your Bollinger Band, as you can see. Now, how does this strategy work? Okay, so the first thing I need to remind you of is the fact that we usually work with 3 time frames, okay, for our top-down analysis. So I'm going to wait for the price to stretch out of the upper Bollinger Band. So let me bring my marker. Now this is it. I'll bring my marker. This is it. As you can see, the price has already gone out of the upper Bollinger Band. Okay, so now that simply means that the price is in the overbought region. Okay, and whenever price is in the overbought region, what do we expect? It means that we're going to be selling that particular instrument or asset. Okay, so since we're on the 4 hour time frame, the next thing we're going to do is we're going to have to wait for on the second time frame, which is the 1 hour time frame. Now please remember, we said the first thing is we'll go to the biggest time frame, which is the 4 hour time frame, to wait for price to come out of the upper Bollinger Band in case of a sell setup. Okay, then the next thing, when we've gotten that, we'll go over to the next time frame, which is the H1 time frame. And also we need to confirm that price is also out of the Bollinger Band, which is beautiful. And then the next thing is we go over to the final time frame, which is the 15 minutes time frame. And now on the 15 minutes time frame, what am I going to be looking out for? Very simple. I'll just simply, of course, the price would be out of the upper Bollinger Band too, and then I'll simply wait. That is where my Williams percentage range comes in. I'll simply wait for the market to drop to the minus 50 level. Okay, and that is when I take my entries. As you can see, as soon as the price dropped to the minus 50 level, what happened? This is the point where you would have taken your entry. Okay, and then price rallied and dropped drastically. Okay, so where would you have placed your stop loss? Your stop loss would have been placed just above the high here. As you can see, just very small risk. Okay, and then the profit is a very big one. You would have targeted the middle Bollinger Band of the time frame you were working with. That would have been your take profit. Okay, and like I said, it's also culminates with the middle time frame lowest Bollinger Band. Okay, this is it. So that's actually your take profit. So this is a very simple but powerful strategy, guys. All these that I'm sharing with you guys are very powerful. If you pay keen attention and try to practice it, you're going to make money for yourself. It's so simple, guys. It's very simple. And please remember that we can also replicate this on any time frame. For example, this is the this is a D1 time frame. Okay, this is the D1 time frame. As you can see, price was in the overbought region, came out of the upper Bollinger Band, and then on the H4 time frame, same story, out of the Bollinger Band. Then what do? I move over to the H1 time frame. Okay, and on the H1 time frame, I wait for the price to drop down to for the Williams percentage range to drop down to the minus 50 level, and then I take my trade. Now see my entry, guys. See what the market did. So like I said, this is a very simple strategy, guys. A very simple strategy that you can take advantage of to make money for yourself. So let's look out for a buy setup this time. Now for the buy setup, we can look at which time frame. Okay, so let me make use of this H4 time frame. As you can see, prices out of the um, lower Bollinger Band, which means prices oversold. Then I go over to the H1 time frame, and on the H1 time frame, what do I have? Prices also oversold. Okay, so what do? I would have to wait at the M15 time frame. You can see the power of combining these two indicators. Now I'll wait on the M15 time frame. What do I expect to see? So I expect to see price touch the middle Bollinger Band. Okay, and then I take my trade. Then I simply place my stop loss just below the low here, guys. Just below the low, and then what happens? See how far the market went. Remember what I said, you take your profit at the upper Bollinger Band of the middle time frame. That is your H1 time frame. When market moves out of the upper Bollinger Band, that's your take profit. Okay, and that should also culminate where your the middle Bollinger Band of the highest time frame you made use of, guys. So this is a very simple strategy, guys. In case you are your first time on this channel, please do well to hit the subscribe button and turn on the notification bell so you get notified each time I post beautiful contents like this. And please don't forget to give this video a thumbs up and share this video so other people get to enjoy what you're enjoying too. Thanks for watching, and I'll see you in the next video.